Here's a summary of Procter & Gamble's 2026 Q1 earnings call, designed for clarity and readability. Introduction and overview. Procter & Gamble reported a solid start to fiscal year 2026 in the first quarter, demonstrating strong execution of their integrated strategy amidst a challenging global environment. This quarter marks the 40th consecutive quarter of organic sales growth and positions P&G for its 10th consecutive fiscal year of core EPS growth. Key financial metrics and performance. Organic sales grew by 2%, broad-based across categories and regions. 8 out of 10 product categories grew or maintained organic sales. Highlights: skin and personal care led growth, high single digits. Hair care, grooming, personal health care, home care, and baby care grew low single digits. Lowlights: fabric care and family care were down low single digits. Regional performance: North America, organic sales up 1%. Consumption decelerated, with unit volumes flat. Price/mix contributed 1 point of growth. European focus markets: flat organic sales year over year, with strong performance in France and Spain offset by softer Germany and Italy. Greater China: organic sales grew 5%, showing sequential improvement and positive momentum, with Pampers and SK-II growing double digits. Enterprise markets grew more than 1%. Latin America saw strong growth, 7%. European enterprise markets were flat, while Asia Pacific, Middle East, Africa enterprise markets were down low single digits. Market share: global aggregate market share was down 30 basis points. 24 of the top 50 category country combinations held or grew share. Profitability: core EPS, $1.99, up 3% year over year. Core gross margin, down 50 basis points. Core operating margin, flat year over year on a reported basis, but up 40 basis points currency neutral, driven by strong productivity improvements. Cash flow: adjusted free cash flow productivity was an impressive 102%. Capital allocation: P&G returned $3.8 billion to shareholders via dividends, $2.55 billion, and share repurchases, $1.25 billion. Management's forecasts and guidance for fiscal year 2026. P&G is maintaining its previously issued guidance ranges for fiscal year 2026. Organic sales growth, in line to plus 4%. This guidance includes a headwind of 30 to 50 basis points from product and market exits related to restructuring. Core EPS growth, in line to plus 4%, translating to a range of $6.83 to $7.09 per share, with $6.96, up 2%, at the center of the range. Modest earnings growth is expected for the remainder of the year due to increased investments in innovation and competitiveness, particularly in the U.S. and Europe. Commodity and tariff headwinds: a combined commodity cost headwind of approximately $100 million after tax, and a foreign exchange tailwind of approximately $300 million after tax are anticipated. The company now forecasts around $500 million before tax and higher costs from tariffs, an improvement from prior estimates. Interest expense: modestly higher versus the prior fiscal year. Core effective tax rate: expected to be in the range of 20% to 21%. Adjusted free cash flow productivity: forecasted to be between 85% and 90%. This includes increased capital spending for capacity expansion and restructuring costs. Capital return: P&G plans to return approximately $15 billion to shareholders, including about $10 billion in dividends and $5 billion in common stock repurchases. Significant risk factors: geopolitical and competitive environment. The company operates in a difficult and competitive global landscape. Consumer spending: evolving consumer caution and purchasing habits. Supply chain disruptions. Potential for further disruptions, though not anticipated within current guidance. Currency fluctuations. Significant additional currency weakness is not expected within guidance. Commodity and cost increases. While partially mitigated, these remain a factor. Tariff instability. The tariff environment can shift rapidly. Highlights of the quarter: 40 consecutive quarters of organic sales growth, demonstrating sustained market presence. Strong execution of integrated strategy, driving growth across diverse markets and categories. Greater China momentum. 5% organic sales growth with sequential improvement. Latin America strength. 7% organic sales growth driven by key markets. Innovation rollouts. Significant upgrades, like Tide's biggest liquid detergent upgrade in 20 years, and the national expansion of Tide Evo. Restructuring progress. On track with portfolio discipline, supply chain optimization, and organizational changes, including up to 7,000 non-manufacturing role reductions planned over FY26 and FY27. Solid free cash flow. 102% adjusted free cash flow productivity. Lowlights of the quarter: fabric care and family care declines. These categories were down low single digits. Global market share decline. Down 30 basis points globally, though sequential trends show improvement. Consumption deceleration in North America. Unit volumes were flat. Increased competitive activity, particularly in the US and Europe, leading to heightened promotional activity in categories like baby care and fabric care. Most important statements from management: Andre Schulten, Chief Financial Officer. First quarter results reflect strong execution of our integrated strategy in a difficult geopolitical, competitive, and consumer environment. Highlighting performance resilience. This marks 40 consecutive quarters of organic sales growth and keeps us on track for the 10th consecutive fiscal year of core EPS growth. Emphasizing sustained performance. We will drive superiority in every part of our portfolio across all value tiers where we play, all retail channels, and all consumer segments we serve to grow categories, provide value to consumers and customers, and create value for shareowners. Articulating core strategy of integrated superiority. We will continue to accelerate productivity in all areas of our operations to fuel investments in superiority, mitigate cost and currency headwinds, and drive margin expansion. Connecting productivity to investment and margin growth. We remain confident in our strategy and its importance, especially in challenging times, to drive market growth and to deliver balanced growth and value creation. Reiterating confidence in strategic direction. Regarding guidance, we're maintaining all guidance ranges for the fiscal year. Signaling stability in outlook on competitive environment. The competitive landscape has intensified, which is expected, as consumers are being more cautious in their purchasing and consumption choices. Acknowledging market challenges on value. I wouldn't call it affordability. I would say value is clearly in the center of the equation, and value defined as price over integrated performance, which is the other four vectors that we're talking about. Defining P&G's approach to value. John Chevalier, Senior Vice President, Investor Relations, summarizing key messages. A solid quarter to start the year in what continues to be a challenging environment, including heightened competitive activity in the US and in Europe. Overall assessment of the quarter. We will continue our efforts to constructively disrupt ourselves, our industry, changing, adapting, creating new ideas, technologies, and capabilities that will extend our competitive advantage. Focus on innovation and future-proofing. We continue to believe the best path to sustainable balanced growth is to double down on the strategy and excellent execution of an integrated set of market constructive strategies delivered with a focus on balanced top and bottom line growth and value creation. Reinforcing commitment to current strategy. This summary provides a comprehensive overview of P&G's Q1 2026 performance, strategic direction, and outlook, suitable for a clear and concise presentation.